If you look at welcome to this live session, traders. I hope that you can hear me now. Thank you. We are looking at gold at the moment. We can see the price is from the daily support level getting rejection back to the upside or a potential trade setup on the daily chart, looking at that level. And just want to make sure the stream is on now as expected without any echo. Thank you very much for confirmation. Welcome back to this another busy trading day. And I'm looking at here. This is if you look at here on the calendar that I'm looking at later today, also coming in 30 minutes time, there is some news on CHF, that is CPI, which was forecast to minus 0.1%. And also we'll be looking at ADP non-farm employment change data coming later in NY session. We are looking at some better trading opportunity in this upcoming session. And I hope that all of you are here for this big trading day, and also followed by, we'll see that coming up ISM service PMI as well. So it's absolutely important trading day as we are progressing towards the first week of December 2025. And I would like to enter some better entry this session. As usual, the market is on the daily support. And when the market is on this daily support, if you look at, this is the daily support level here. And in that daily support, if you look at the overall picture in the market, and I'm looking at the daily price action to see that where the market is heading here at the moment. And in this daily market structure, first of all, looking at the bigger picture, looking at the monthly chart to see that overall direction in this market. So from the monthly, we can see that gold is long-term bullish market. If you look at here, you can see that historically it's a bull market, and we are looking at also trading in the major direction of the flow. That's what we are looking at here on gold, right? So this is the bigger picture, and looking at the weekly price action here, that's where we can see from the weekly perspective as well, we can see this is bull market. The previous weekly candle closed with a pretty massive bullish engulfer here in that area, and with that bullish engulfer formation on gold, as it's a big bull candle this week, the market initially dropped to that low here, dropped to this support, and then got rejection back to the upside here. Now looking at daily chart that you can see on gold, and this is the daily price action where the previous daily move that you can see from here, it was massive drop to that previous resistance, which is turning support here, and the market has tested the daily 10 EMA, and we saw that there was an immediate bounce back to the upside. Candle closed with a long wick at the bottom. Now today, as soon as the market opened, we can see the price has managed to bounce back to the upside here. Now this is the daily market structure, where looking at the market potentially to go ahead and hit that level. Now looking at the 4-hour chart, you see there's a 4-hour, this is the 4-hour price action where there was a back-to-back 2 sessions bullish followed by a previous session, just the candle close here, new candlestick pattern on the 4-hour that has closed at the daily support level. Now this candlestick pattern and the price action, it's potentially showing that there is a possibility for bullish move back to the upside here in that market. So look at the 1-minute chart. If you look at, this is now lower time frame sideways market, but higher time frame we can see that there is a bullish bounce here. And that's what we are looking at, that we can see the market is we are looking at this market structure for any kind of move back to the upside in that area. So if you look at this, this is the 5-minute chart and the lower time frame, we can see there is a bounce here from that level, and with this bounce the market is maintaining this series of higher low, where if you look at, this is a structure formation here, and in that structure expecting that gold market to potentially bounce back to the upside here to create a new higher high in this market. So for us to look for an entry in this market, to see that the market is pushing back here to this daily high, because the market, if you look at the overall picture in this market, you can see this is the 4-hour price action where there was rejection back at this support level, and with that rejection the market dropped to the daily low, and it's now trying to push back to the upside. So the bias here as usual on gold is bullish, and we are looking at this bullish market structure here on gold for this possible move back to the upside in this market. So let's see that how the price action has built the momentum, and then we can look at the entry opportunity here in this market. So there was a break below that. If you look at, this is the daily high, today's high, the market dropped to that daily support level. Now what we can see, the price slowly building its momentum back to the upside to this daily resistance level, right? So this is where looking at this market structure to give us an entry here in this market. So what we will be looking at here, the market to break that high and then to create a new higher high. We'll be waiting for a drop. We'll be waiting for pullback to this key support level, right? So this is what we are looking at, this market structure. And this is what also we need to look at, that overall picture in this market. This is support level, right? And in that support, this is a key support area that I'm looking at this market structure to penetrate back below before we look at an entry. Because whenever we see the market in an important support level, we need to look at a market that is trending, right? So which is a key zone that we need to look at. The market that is trending, and in a trending market, we want to trade that instrument every day. Right? So this is where, if you look at here, the doji 30 minutes and the 1 hour price action as well. If you look at, there is also 1 hour doji here, and 4 hour perspective, the market here in this area, the price has dropped and expecting it to return again back above here in this market. The current support level is here, and we want to see the market to penetrate back below. And I'm looking at this market structure here from this support to potentially bounce back to the upside here in that market. So if you look at here, this is the lower time frame market structure here, and in the lower time frame market structure, there is a possibility for this price to break that low, break that trend line, and then to revert again back here in that market. And that's what the key support level. We will be looking at entry here in that market after the price managed to break this swing low in this market. And that is where the key to look at the market structure. That is your key to look at the price section here in this market. So where the market is coming here to that support level, if you look at, this is a trend line. And in that trend line, the price has tested the low, and with this test of this low, expecting that the market to potentially break that high and then to create a new higher high. The price on a support level, and this is where we are looking at an entry here in this market. This is the lower time frame price section where the market is heading potentially back. Is the price on the daily low? Okay, so here is the daily low, and looking at the multiple time frame. Yeah, so moving the chart so much is because of understanding the levels. Okay, it's at the beginning and we will be setting up to here at this level. Thanks for your feedback. Now here is because the market is constantly changing and we need to look at the multiple time frame levels. So if you look at the 1 minute chart, and if you look at the 4-hour price action or the daily support, that you can see that the market is in a different level. All right, so because the market is in a different level, you won't be able to see exactly what level the price at on the lower time frame and the higher time frame here in that market. Okay, so you are gold will go down more. All right, so this is another very important that FX momentum 2038. I would say that you might need to work a little bit on your trading psychology, because this is a very important understanding, guys, that being a trader means you have to be very, very humble in terms of your trading psychology, right? Because the market can go up or can go down. All right, so if you see that gold will go down more, if you are very sure about it, that means you are doomed to fail as a trader. This is a really, really important lesson, and as a trader, as a fellow community members, I really want you to work on your trading psychology, because no one can tell the market which way will go. All right, so if you are very sure that okay, so I understand. Look, if you are very sure that the market will go down, then you need to work on your trading psychology, because this is where very important that always be very flexible and humble in your trading decision in terms of the directional bias, no matter how confident you are, right? You see that when you open a position, you have to be very confident that okay, the market will go in your direction, but at the same time make sure that you do risk management, because the market can do entirely different than what you have planned, because the market depends not on opinion, the market depends on itself. The market can do anything, can go any direction. Then how do you play as a trader? You play in terms of the probability, right? So if you look at the probability of today's decision of your trading for anyone, then you have to have an edge in your move. Okay, okay, so it broke institutional support, and I am okay, very good, thank you. So basically what you need to, like, what you as a trader look at is the confluence, and then wait for the market to go in your favor or do the risk management. Because if you look at the daily price action here, right, what do you see? The daily market here, the market has on the daily chart, it's a bull market, right? So it's very important to look at that you are looking at the major trend. Now the market is still can come back to fill that daily long wick here. Okay, it still can come back further, but what we can see here from the bigger picture, that this is a bull market, guys. Now daily price, what do you see? The previous daily. Now how do you know that it's a bull market or bear market? The first thing that you need to look at is the market structure, right? look at the daily market structure here. This is a daily move followed by narrow pullback, another move followed by another pullback. Now, if you look at this daily bullish candlestick pattern that you can see, it's a strong bullish confirmation followed by the previous daily candlestick pattern that you can see. It's a long wick, right? And what that long wick represents, that there is a buying pressure in that area. And when you see that the market is showing that there is a buying pressure, there is a possibility that the market to go up. And so far in the first two session of the Asian session, what you have seen that the market has created an upside momentum here. Therefore, the bias from the technical and the fundamental. So what is the fundamental? You need to combine the technical and the fundamental together. That's where you can get a better understanding of the market. So what is the fundamental? Let's go to the DXY here, guys. What do you see that? DXY is bearish, right? Do you see this trend on DXY? It's a bear market, right? Okay, so when you see the market on DXY is bearish, if you look at the daily, that you can see there's a gap open. Now, what that gap open mean to you on DXY? It mean a lot, because look at the previous daily candle on DXY. It's a full body candle close, red, bearish, and golfer, right? And that red, bearish, and golfer had to open with a gap, because that was a very important candlestick pattern. And if you look at the DXY past few days price action, what do you see? Back to back two significant bearish and golfer. There is one here which is having the liquidity. This is a high liquidity candlestick pattern. There's another one here with a high liquidity. And then what we see, there's a crossover of 10 and 20 EMA. All right. So, and then gap open. So that gap open can manifest. You can see the market to break below here, right? And thanks for that, you guys. This is a good discussion in terms of trading psychology, because you know that the majority of the traders, they normally fail or not being successful because of the trading psychology. So it's work in progress. I know that it's difficult, right? As a trader in the beginning, I was in the same situation where I was very confident about my decision, and then I took a big risk and the market has gone completely the other way. Okay, so it's a part of learning to be a trader, means that you understand that the market can do at any point in any direction, but at the same time, all right, you have to be very when you look at your trading decision, you have to be very confident in your entry, but at the same time keep a backup plan that okay, this is which is very important. The chart is back on. Good morning, everyone. Thank you. Yep, absolutely. And here is the, if you look at the daily support here, right? And what I'm looking at here, guys, that the market to bounce off the daily support, that's very important, because here is that there is already a rejection back to the upside from this daily level. And what we are looking at here in that market, this is a consolidation pattern. Now that consolidation from this, we could see, because there is a series of lower high, what I'm expecting here, guys, the market can do completely differently. So make sure that you always think in terms of probability. Being a trader means that you know that how to think in terms of probability, right? So when you look at the daily level here, right, this is where the key. If the market crossed the daily low, that is where there is a possibility for a rejection from this lower price here in that market. So this is a series of lower high, expecting the market to retest and then to reject back again. And I'm bullish on gold, as there is a possibility for bull until we see the market reject again in the direction. Now we haven't entered yet because you want to see the confirmation. One is your direction, right? Either you are bullish or bearish, and then confirmation, right? This is where you will be able to see the proper understanding of the market. This is the daily low. Now, if we are set up for the bullish move potentially in this market, we need confirmation for the rejection from this lower price. And that's what we are looking at. You can see this is a lower time frame downtrend. And downtrend can still continue, right? Until we see the trend changes, the market sentiment changes from this local bear to the global bull market. You need to align the lower time frame trend with the higher time frame trend. I hope that makes sense to you. Thanks for joining here. Now, if you are enjoying the live session that I'm doing every single day, make sure you like the stream and also subscribe to the channel if you haven't done yet. Do you compare the gold chart with other charts, or do you compare it to the fundamentals? Okay, so the gold chart, we can look at the DXY because it's very much opposite of DXY more often. You'll see that. So if you see the DXY is highly bearish, you might see that gold in more often, but sometimes they move in the same direction more often. Gold all the time, you can say that it's gonna, because we are trading against dollar, right? So if you see the watermark here, gold spot against US dollar. Okay, so now as you can see, the price is just tested the daily low here, and from the daily low, if you look at that market structure, now from the daily low, you want to see that the price to form a reversal pattern for the market to potentially bounce back to 4228 level, because it's a bull market. Okay, so here is what we are looking at, that level. So more often you need to play or trade with probability. Okay, the probabilistic edge. See, this is very important. Look at the gold or any trade that you will be taking. So what's the difference between, let's say, trading, or if you bring the worst thing to the gambling, right? What's the difference? How can you differentiate between trading with gambling? Look at that on, if you have ever seen the casino. So how does this work? Look at this one here. So you see that one, right? And when you look at the luck, right? If you just flip a coin, and when you flip a coin, then what's gonna happen, that the coin, if you go to the, let's say, 5,000 times, if you flip a coin 5,000 times, it's gonna end up being nearly to 49% to 51%, nearly that head and tail in one direction. All right, now add confluence to it. That's where you become trader. So there will be, no matter how confident you are, there will be some trade that will not go in your favor. But if you use the confluence to add to the probability, that is such as the trend, support and resistance, okay, oversold, overbought in RSI, you can use the Bollinger Band, some traders uses, and then wait for the market to go. Okay, so these are the zones that you need to look at for that entry opportunity. Thank you very much. Welcome. Okay, so here the market now at this daily support that you can see, the market is now putting pressure on the daily support. Now this the pressure that you can see on the daily support, from here expecting an initial bounce back to the upside. Well, that's what we're looking at. Now the market is approaching the previous daily low, which is the key level here, right? Now let's bring it to that level, that zone here. And once you can see the market has dropped to that level, once you see the market has penetrated back below here, you are going to look at potential that we are looking at that level to have that potential rejection. Now there is a bullish fair value gap. If you look at this 15-minute chart here, right, the market, if the price managed to break below and cannot close back below on the 15 minutes, then can expect it to fill that bullish fair value gap. But the possibility here from the daily support to go back to the daily high is very high, right? So that's the probability that we are looking at any entry here. So for me to enter a bullish trade here that I'm looking at, okay, so looking at that level to see that the market to have that rejection. Now if the market, if you look at this is the daily open, right, and the market price below that level, we'll be using potentially a pending order if we trade this market back to the upside for breaking this high. If the market goes back to cross that level, we could see the straight going back up to potentially to the daily high, which is 4228 level. And that's what waiting to see the market to create a potential rejection from this lower price here on this level. So wait for the market to break below before it eventually have a rejection to the upside. We will be taking a short-term position here. Once the market set for any kind of move, we will be trading in the major direction of the trend. That's the key here, guys. Trading always in the global direction will give you always an edge in the market. All right, so this is where I'm looking at that lower time frame. So to enter, for us to look for a buy stop order, we'll be waiting for the market to potentially break from this structure. This, you can see there is a initial rejection here. Okay, so there is a, once we see the market manage to create that reversal pattern here, we will be looking at possible rejection of this lower price to this daily high. And if we enter here, we will be using a pending order, that is the buy stop order, keeping the stop loss below the swing low here in a zone where we will be. And this is the level that I would like to place a buy stop order. Stop loss below this low here, it's a buy stop. That means if the market goes break this high, which is the price is at this level that we can see, and expecting it to potentially bounce off the level. So there will be nearly to 58 pip stop loss here. The market is nearing to the entry here, so but it's still not there. So placing the buy stop at 4205.73. So it's a pending order, 4205.73. Stop loss placing at 4199.84. And TV target placing at 4219.67. It's a pending order, buy stop order. So if the market breaks that high here, that we will be taking the short-term potential move back to the upside. If the market breaks below, we will not be going into the trade because the global trend is to the upside here. It's a fully risk managed trade. If the price takes our entry and cross this high, then after creating this nearly to 50 to 60 pip move, we'll be taking partial profit and we'll be moving the stop loss at entry. You might get a trigger here that I'm waiting to see that potentially. So the buy stop here at 4205.73 that I placed, and also I've shared the same trade in the premium group as well, waiting for the market to show up that a potential bounce back to the upside here. And if the price goes up here, this is the daily support, and my trade is active, guys. I'm on the trade, so the trade is on, and we are looking to see how the market reacts to that level. So here is guys, this is where the key to look at. There is an inverted head and shoulder formation here that you can see, and with the inverted head and shoulder, that I'm looking at the market to potentially revert back again to the upside to cross this 4211 level. If the market managed to cross that 4211, crossing that high here, we will be looking at partial profit taking and moving the stop loss at entry. Currently I'm running in little profit here. Let it push back to the upside for this potential move. We are around 10 pip up. I want to see that crossing this key level. All right, going back. And this is the 5-minute chart here that you can see the market is all right. So 1-minute chart, we see some buyers pressure that could take that market potentially to that direction here. Welcome. Thank you. And here is the market. Here, if you look at the price section, has formed an inverted head and shoulder, and if we see this inverted head and shoulder is intact, we could see the market to cross that level back to the upside here. All right, so we see that some bullish bias here in that area. And by the way, in the meantime, traders, if you enjoy this live session, make sure you give a thumbs up and also subscribe to the channel. If you haven't done yet, press the notification bell so that you are not missing any of the content that I'm posting every day. All right, so want to see that potentially crossing 4211 in this move back to the upside, and that will give a decent number of pip that the market potentially cross nearly to 50 or nearly to that level. Welcome. And this market can go above 4211 or even can cross nearly to 4228 level. If the price managed to strongly break above, we need the volume in the market, as sometimes volume drops and price not being able to break that high. But if you look at the 1 hour, the previous hour there is a doji, and now okay, so the lower time frame, some smaller candlestick pattern that being formed here. Now there is a double top here. Welcome, welcome. And here multiple long week candlestick pattern has formed in gold, and the key here, understanding flow. Thank you. This is what I love, guys and girls, and that's what I do. Let's wait to see that where the market is heading. I think there is a potential for this move back again here in that area. Okay, so there is a 1 minute bullish engulfer has formed here in that area, and that's what we are looking at the market to potentially cross that and continue to there is a bullish engulfer on the 1 minute, and so the price, if you look at here, it tested this previous resistance as support, and the market structure that we can see here is that there is an inverted head and shoulder, right? So now so there is a, after this bullish engulfer, there is rejection. We'll see that if this is where the market wants to create new higher high. Now price is at entry here. Now this is the key here to look at the market to okay, so you see whenever the price is dropping back below, there is a bullish pressure coming in, and that could bring the price back to the upside here, that you can see so far. But at the same time, if the volume is low, there might be deeper liquidity trigger. But at the moment, the bias as we opened in the direction of the major trend, that's where the key to look at. So the 15 minutes candle close with a green candlestick pattern. Now here is what you want to see. This is the 1 hour chart. 30 minutes price action. Might get a retest again. Okay, here is the 1 minute drop. This can be again another false breakdown. And if that's the false breakdown, you could see another bullish price action formation here in that area that can cross that back to the upside here. And this is what we're looking at, this price action, to see that the market is showing that momentum here back above. So there is a narrow doji on the 1 minute chart that you can see, and that might lead the market back. Welcome. So after multiple retests, we see there is a bullish green doji has formed. Now that can be act as a bullish rejection, or it might still can cross the low back, depending on how. So if this move takes that market back above this high here, that's the sign of the market may continue to rise back again to cross this high. That's what we're looking at, to see the market, the bulls coming in. And here is in that case, once the market managed to break this high here, it's gonna create this inverted head and shoulder, and that's potentially a reversal pattern here for this move back above. Okay, looking at this market just to cross that entry level again, and we are at just above our entry. So there is an inverted head and shoulder has formed, and also there is a false breakdown. Market managed to bounce back up. Now one impulse can take that market back to 4211. Let's see that how it's gonna create that momentum here in that area from the 1 hour, 30 minutes, 15 minutes. 15 minutes the price has reached that level where it started the price action. So back to back 2 5 minutes long wick doji. Two rejection. Are you going to see the next one bounce back to the upside here, or it's coming to fill that wick? We can see the market is crossing that high here. Okay, so it's crossing that level here. That you can see we are up. Here we are up nearly to 15 to 16 pip. So getting that the price action here so far showing up to be bullish, and the market has just moved above our entry, and this price action they're looking to see to cross that resistance. So far here lower time frame price action showing to be potentially bullish, and even it might remain little in a sideway later today, but if that's the case, expecting a short-term bounce back to this resistance line here, to this high. So here is the bullish move that we can see here in the day. There is a bullish engulfer has formed, and we see the price action so far, the market structure here in that area. Okay, so there is another 1 minute bullish engulfer has formed, which is also showing the directional bias in the major direction of the trend. So created a couple of long wick formation here in that area. Okay, so there is a bullish there is another bullish price action here in that area, that looking to see the price to cross this high, potentially to create a new higher high here in that market. And there is a doji. So we are almost creating a potentially new higher high. I'm still on this trade, holding on to that for possible another bounce back to the upside. So far here it has created an uptrending market structure that is looking at the price to go ahead, cross this high, potentially to create a new higher high. Unless this 5 minutes price action that we can see breaking low again. And we want to see that this 5 minutes candle closing potentially the bullish candlestick here. Okay, getting back up here and successfully moved that market back up here so far. Looking to see a new move to create and to go back up above this high. We see some sideways market, but it's still showing bullish. I'm running in profit here, and I hope that the market will potentially bounce back to the upside here. Are you guys with me? If you're running this trade, you can say yes. Or if you're learning from this trade, you don't have to run. You may be just learning from this trade. If you're learning, say yes. So now here is with this doji that you can see the market has managed to create this series of higher low, and want to see the market manage to cross this high and then potentially to create a new higher high before we take any partial profit and moving the stop loss at entry. And the price action so far showing to be upside here, so I'm holding on to that for this move back here in that area. In the last move there might be rejection, so as soon as the market managed to break this swing high here, you can expect it to create a new higher high. Creating a bullish engulfer can give a possible upside momentum back here in that market. Good afternoon. All right, so all right, crossed that high here, guys. Pardon me. Created a new higher high. So this is where we are at now, nearly to 20 pip move. And as soon as the market cross another 10 to 15 pip up here, we will be taking the partial profit and moving the stop loss and to make the trade risk free. Let the rest running for the full profit target as long as the market is moving in that direction. So here is so far I'm still holding on to that. We see some pullback in this lower time frame. Now we need to see that move again. We see some bullish bias that has come here. Yeah, this is what happened. The market is trying to cross that high because this is a change of potential lower time frame trend. So when the market face a change of trend, it face resistance. The sellers try to push the price back again. But once, because the market had already established here a lower time frame and a trend here, and also this is a consolidation. So the sellers trying to push that price back below, and that's why they're entering into the early trend. So we have entered a very early move, and that's what I do. I use high risk reward strategy with early possible early entry to the trend, so that if the market goes in my favor, I can take the big move, because the trend, more often you'll see that the trend may not last very long. It creates a move and a return. So to take a bigger move, we need to enter early in the trend. So to enter early in the trend, you need to enter from the zone where the smart money is trading the market, where the smart money is buying the market. That's where the real trading comes in play, because the market is moved mostly by the institutional volume, right? So institutional traders trade before the move happens, because when they trade, the move happens. So that's why it is so important that especially as early as possible to enter into the trend, so that you can take the potentially bigger move in the direction of the trend. So here so far we can see the multiple breakup structure, the market trading above our entry, and what do we want to see here, guys, is to break this high. See quite a few long wick candle is being formed, right? And there's a 1 hour candle closed, which is a long wick doji. So now in that level, The current high is here, which is 4208. So there is a long wick here, and there's a pin bar on the 5 minutes that you can see it in the last moment is formed. The pin bar we're looking to see that the market to so there's a deep end. With this 5 minutes doji, the market is consolidating here, and little choppy here in that area. So if you look at this pin bar, looking to see that breaking that 42007.99. Struggling in that area to cross this high, and that's really interesting. It's so far I see still bulls trying to push that price back above, and all right, so now what we see that in this area there was a breakup structure, and the market is it's a very interesting price action is being formed, and it's still showing that the price, the bulls trying to push that price back up, there's sudden rejection coming, and okay, so here you look at it, you see this is a consolidation, and again bullish move back to the upside here. So here again in the profit area has entered, and I would like to see that there is a strong rejection back above as soon as the market cross 4208. All right guys, as soon as the market cross 4208, we see there is nearly there. I'll be taking partial profit, moving the stop loss as there is a very massive consolidation, and to run this trade for full we will be looking to see the market crossing that high and then let the market do the job, either to move up further or going down. So here is so far showing bullish move, and I want to see that crossing that high. It's carrying rejection from this higher price. I'm still holding on to that. Okay, so we see that there's a buyers coming in. You see this candle is getting rejection to the upside, so there's a buying pressure here in that area. There's a rejection again, so okay. You're gonna see that crossing that high. Okay, so there is a narrow bullish pin bar has formed, and looking to see that it's starting up a move back again. We are back on profit area and would like to see that continuation. Are you guys with me? So creating a new higher high can give us an option to move the stop loss at entry with a partial profit taken. That will secure the trade to be risk free. And awesome, thank you. And here is the price action that you can see, little sideways. So with a bullish engulfer that you can see the market has created so far that bullish price action with a series of higher low, and with this bullish price action expecting the market to potentially cross that high and then to create a new higher high. waiting for a potential breakout here in that direction. Okay, back on that bullish engulfer. As soon as the market managed to break this high here, we will be on the managing the trade accordingly. That looking to see that the market structure is being able to break that high and then to create a new higher high here. So from this structure, guys, you can see this is a very sideways market, and there's a 50-minute candle close with another big long wick doji. Now this doji that you can see we can see some pullback in this lower time frame, and So when the market coming down, we can see some bullish move is appearing here. So that is where looking to see that this is structure to break to the upside, and if it breaks to the upside, that to cross 4208. We're holding on to that trade with me. Thank you. It's moving that that price action. If you look at it's rotating at entry. It's very interesting here. Again, this is the 5 minutes price action. So it's on the support, and the market is struggling here for a so it's currently after quite a few rejection, the market is on this support. So there's 30 minutes candle close coming in 6 minutes time, and okay, so that the price on the support, and that can bring that market again back to the entry or above. Now guys, this is where we are. This is the last point that you want to see the market coming down, and if the price from here getting stronger bounce back to the upside, we'll be closing the trade with either partial or full profit, depending on how the market structure is creating here. So how the market structure creating here is important, because if this 1 minute is not being able to break that low here, then you could see the market to break this high here, depending on now how the price action is closing. There's a 5 minutes candle closed with a big bearish engulfer here, but that can be that the market still to remain upside because of the longer term support and resistance that you can see the market at the daily support, and there is a bounce, and that's what you can see as the market entered into the profit area. And this is what I'm waiting, guys, to see that the price to break that high. And the bulls looks stronger here, and want to see that the market is crossing that threshold back to the upside. So far here is showing bullish move. It's a smooth semicircular resistance. Want to see that breaking back above. And by the way, guys, if you're enjoying the live session, yeah. So how many types of breakout? Okay, so you can see there's a 15 minutes candle close coming with a long week rejection from this lower price. They're expecting the next one to potentially bounce back to the upside here in this market. So the type of breakout, there are many types of breakout that you can see. If you look at the textbook, you can find a lot, but the most important part here is to know when there will be breakout and when not to be, rather than the type. And it's good to have more knowledge, but if you look at support or resistance, how do you know that it's gonna break out or no? That's the most important question, because regardless of type of breakout, if you see that, let's say any type that you identified, but it's a false breakout, right? Then what will happen? That breakout is not valid and your setup will not be going ahead. So that's why it's important to know the symptoms of breakout. That I would highly encourage to learn the symptoms of breakout. So how do you know that the symptoms of breakout? How do you know that this support or resistance is potentially to break out or no? There are some symptoms that you can identify. So you see there is some rejection coming, guys, here, and that's not very favorable that we can see in the direction. But let's see that how the market structure. There's a 1 minute candle has got rejection, and wanna see that it's crossing that high for us to continue the trade. This is where, okay, there is a immediate bounce which is now gone into above my entry. With this multiple long week candlestick pattern here that you can see, where okay, took a lot of time. You see there is a very choppy market structure, but finally we could see that this is what I'm waiting for, the breakout. We are running in profit, by the way, and at any point we can solve the trade depending on the price action. I'm holding on to that yet. Okay, so in terms of breakout, if you look at the market presents more false breakout than breakout. So you see that more often. You see all those long week candles that you can see, they're mostly a false breakout. So how can you identify a false breakout over a valid breakout, right? That's very important to look at. So if you want to understand a valid breakout over false breakout, the first thing that you need to know the symptoms of breakout, how the breakout happens. So what kind of move you can consider that to have a breakout. So rather, it's best idea is to look at the false breakout. So if you know that anything that could create a false breakout, that's not a breakout, right? That's how, like, if it is not a false break, it's not a, if it is a false breakout, then it's not a breakout, right? So what are the symptoms of false breakout? You see there is another false breakout here in the market, again rejecting back below to this support, and there's a 5 minutes candle closing that you can see, and this 5 minutes candle close is important to see that if the market here the 1 minute price action, 1 hour, 15 minutes created a doji. It's trying to come back for a quick fill. Immediately got rejected back again here, and So here we are at entry at this point with this trade and got a little bit above the profit target to the above the entry. And so here we can see the market became very choppy, and okay, it's getting that back again up here potentially to cross this high. Okay guys, so got back again, and I'm waiting on a break of structure from this consolidation, and that can bring a new momentum here. We are back up at our entry. It's a very dense consolidation that you can see one candle range, and okay, crossing that high, and would like to see a new higher high created across that 4208. We might see here potentially upside. I'm holding on to the trade, and we might be very soon expecting to cross this high before we take full or partial profit, because we are a day trader and a scalper. We don't run trade too long. If this market not showing a very stronger bullish confluence, we'll be closing at running profit, but still want to close it at least some gain here for this move, and want to see that crossing that high, breaking back to the upside. Like to close successfully as a bullish trade here from this level. And there's a 30 minutes doji that you can see is being created. And all right guys, and I'm going to okay, boom, that's back to the upside. I'm going to close it now with nearly to 30p profit fully, because this market is very consolidating. I've closed the full trade and also send the update in the premium group. So we gain, for me, all right, it's bounced back to the upside from our entry. Have you taken? How many lots are you trading? So this trade, look, it depends on my risk settings. I take a very smaller risk, guys. I don't want to take big risk. This one I traded 0.61 lot. What's your status with the trade? Can you give an update in the live chat before we close this live session, and we'll be starting another one. Thank you very much. Thanks. You're welcome, guys, and this is what we do every single day. I love trading, and I believe that you guys also love trading. If you love trading, then make sure you like this stream. Stay connected by joining, subscribing to the channel, and you can stay connected also by joining the free Telegram. You can find link below for regular every update that I do share in the Telegram as well. And so we'll be coming on live in just a matter of 2 hours 15 minutes for the NY session, and that's going to be very important session as ADP non-farm employment change coming later. That being said, thanks for joining here, and I'll see you again very soon trading live. Until that, stay well, stay happy.